So you want to be a profitable day trader, but all these videos you're watching online, they're like super confusing, overly complicated, and they're just filled with hour after hour of just incoherent babble that does not make any sense to you whatsoever. It's like you walked into the middle of a conversation that you don't know anything about. And that is really, really frustrating, right? But don't worry, I got you. Because today's video is how to become a profitable trader the simple way. All the essential tools and strategies that you need to help build the right foundation to point you towards the path of profitability, regardless of your account size, your age, or your experience. And if you've had enough of taking one step forward followed by 5 steps back, or you've had enough of studying strategy after strategy only to end up worse off than what it was when you started, well, this video is for you. Now, if you don't know who I am, my name is Doug, and I've been day trading now for more than 25 years. And during that time, I've made at least 154,000 day trades. I know, that's an awful lot of day trades. Not to mention, I have written every single one of those trades down in these notebooks right here. No joke. I know it's old school, and I'll show them to you. But more importantly, what I'm going to do today is I'm going to show you all the lessons I have learned from all the winners and the losers that are in this book. Starting with step number 1, the most important thing that every trader needs to know in order to become profitable in the first place. Step number 2, a very simple and repeatable strategy that you can use every single day of the week. Step number 3, I'm going to make a real live trade in a real market using that very strategy. And step number 4, a special bonus for any of those who stick around just a little bit longer. But before I get into that, let me show you a few of these books so you know I'm not messing around with you. Almost every single one of those 150,000+ trades, they are all handwritten in these books spanning over 20 years. And not just that, there's like a laundry list of my emotional state throughout those years. And looking back at some of the older ones, man, was I emotionally a wreck when I first started trading. And honestly, I had to look through a few of these here before I showed them to you to make sure they didn't have, let's say, unfamily friendly language in them. So it is trading after all, right? And what's funny is I'm still doing this today. Like, this is actually from today. Now, I know it would be a lot easier if I would just catch up with the times and put this on a computer like most people would do. But for some reason, this is just how I roll. I don't have an answer for it. But ever since I was a kid, I was just obsessed with writing stuff down in notebooks. In fact, I carry notebooks with me all the time, jotting notes. I don't know why I do it. It's just what I do, which is strange. Now, I have thought about throwing these things away several times, but when it comes down to it, and my hand's on it and they're headed towards the trash, I just can't do it because I'm so emotional. And it might look like chicken scratch to some people, but to me, this right here, this is my life's work. Like, everything I've ever been about as a trader, everything that I've ever went through from winners to losers, everything I ever felt emotionally from the very highest highs and the lowest lows, it's all written in this book. And it's like, I feel like if an alien life came down and abducted me and said, "Tell me about you," I would just hand them this book. I would say, "Here, this is me as a species." And sometimes I thought, I'll just give it to my child, one day, or plug it into AI as some sort of study. But anyway, thought I would share. Now, enough of that. Let's get down to business. So the goal of today's videos is to simplify your trading. Let's say dumb it down to help you clear up your confusion, help you make better decisions that will ultimately lead you towards profitability. Now, the number one thing that every trader needs to be successful, like everything begins and ends with mastering the art of technical analysis and price action, but the right way. And the right way isn't memorizing all of these chart pattern cheat sheets you see on the internet. Most of those patterns were created in the 1930s anyway. The right way is knowing that a move that looks like this here on the screen is not a sell-off. It's a setup. And it's knowing that a move that looks like this is not a rally. It's a false breakout. And in order for you to master technical analysis the right way, all you need to do is focus on 3 main things. That is supply and demand, candlesticks, and range. So let's go through each one of those, starting with supply and demand. Now, I know for a lot of you who are watching this right now, you have a pretty good understanding of what supply and demand is. It's also called support and resistance. And just for reference, for the remainder of the video, I will refer to it as support and resistance because that's the lingo I like to use in most cases. It's the same thing. But I know that you know this because it's one of the first things that we learn when it comes to technical analysis. However, what we don't learn enough, or it's not spoken about enough, is that not all support and resistance areas are created equal. And that's important because I would bet if you look at your losing trades, a big portion of those losing trades is probably because you are trading a pattern that is not at a premium level. And that's why you have inconsistency issues, okay? And to show you, I've got a chart here on the screen. It's the NASDAQ. I'm using a 5-minute. None of that is important because support and resistance is universal regardless of asset and time frame. I spread it out for a few days so you could get the point. We normally don't have to go back that far, but this is what's important about it. We must first determine who controls the chart and where. Where is the biggest buyer and the biggest seller? And this is very simple to do. The first thing that we need is to look at the highest price point that we can see on the chart, which is right over here. And we're going to take that and draw a line all the way over to the left side. We're going to find the lowest price point, which is down here, and we're going to draw a line and draw it all the way out to the right side. These two areas right here, this spot represents the highest level of collective sell side pressure, which means more sellers took over and dominated that chart. So much so that that activity set off a pretty good aggressive sell side incident, right? You just kind of dropped there pretty aggressively. Inverse relationship at the bottom, the buy side pressure was so strong there, it ignited an actual rally. So to show you the dominance, it was so strong, it completely reversed the chart aggressively in the opposite direction. So this, without question, are the two most premium areas. And the rule of thumb in most cases for the newer trader, let's keep it simple, is when you get into that sell side area, why would you want to buy? Okay. Why would you want to become a buyer? You shouldn't, because there is a seller there. And until that seller has been dispatched to the top or the buyer has been dispatched to the bottom, that thing will never move outside of that range, which we'll talk about in just a minute. So the rule of thumb is you don't want to walk into it. And you'll see it's clearly written here on the chart. Every time you get anywhere near that, there is resistance. Every time you get selling down in there, a buyer shows back up. It's routine. So you don't want to position yourself to the opposite side against all of that money and all of that power. Now, it's important because I'm going to take a sidestep here real quick because everybody has to know this in order to become a successful trader, is this. Technical analysis and charting is to save us from ourselves. You may have the very best pattern you've ever seen in your life. You may have a sweet news event, whatever it may be. You say, this time is different. It's not. There's an old saying in technical analysis, it is until it isn't. Until that thing can move either up out of that top region or the bottom region, it's going to stay condensed in that area. Now, in the perfect world, I said, we want to trade there, but we don't live in a perfect world. So what we can do here is create some, let's say, alternative levels. And I use the rule of 3, adding 3 more levels to that. So I'm going to go down here and I'm going to grab this level, or a pivot, I should say. And if you don't know what a pivot is, it's anywhere where price had significantly reversed. So you'll see there's been reversals here. There's a pivot reversal here. I'm going to draw it all the way out. And I am going to put one right down there. So hopefully you see how I came up with each one of those pivots. You got one there, one there, one there. Now these levels are obviously not as valuable as this top level and the very bottom level, but maybe you don't get a chance to trade within the others. But here's the simple solution for most traders. I'm saying most, the newbie, the struggling trader, keep it simple until you build some momentum and some chart knowledge. It's easy. Just don't make a trade unless the asset you're trading is at one of those lines. If it's not there, hands off. Just don't trade it. It's that simple. Okay. Now let me go ahead and take a moment here to test your knowledge. Take a look at where this is right now. Okay. So if I kind of draw that line, where are we? Okay. We are at that sell side pressure, right? So even though this looks like a very good chart, we have a problem. This has been routinely sold and sold aggressively. And again, I ask that question that all of us must ask ourselves before taking a trade. What would be the reason that this time would be different? Now, if I kind of play that forward here for just a little bit, what are you going to see? Take a look at what happens. You get rejection. This is not an accident. In fact, it consolidates there and it looks like just right there on that candle, it's ready to pop up there. This just sucks people in, then it gets sold back off, right? Every single time. And it's not because it's a bearish instrument. It's because there is a seller up there that has not yet been dispatched. And until there's evidence that they have been, you're going to continue to be sold there. In fact, they gave you a clue in the pre-market right there. They sold it again. Also, take a look at what happens over here, right? You end up getting a reversal bounce off of that first level. Now, there's something that you have to understand about that. Because these two, this one up here and the one way down here, represent your premium, these ones in the center are non-premium. Let's say B minus kind of levels. You can make trades, and as you get more advanced, you will make trades. But I want to show you something that will really, really help you. If you take a trade off of a non-premium level, let's say a B level, you might have some trouble with the trade. It will get choppy, it'll get sloppy, or it won't rally as much. So for example, notice the aggressiveness off the very top, and it just drops right down into the level. Now you got a pretty nice signal. You'll find out this is pretty good for a scalp and it's pretty good bounce, but chances are it's not going to hold because that's not a premium level. And then what happens is it drops again. Notice they try to fight back off of it one more time and then it drops. Now, if I kind of move this forward, you have another problem here in terms of an invalid level. There's a bounce there, but to trade a bounce like that and to have an accurate signal, you're off of either one of those levels, which means that's probably not going to go anywhere either, right? And if I kind of just move it forward, you'll see what happens. It just never gets out of that area. And again, it doesn't have anything to do with bullish or bearish. It's just those are your premium levels, and that's where a trader should trade. So if you're new, and to keep it basic, or you're struggling, mark out these levels. And number one, make sure you just don't trade outside of them. Again, there'll be other strategies to use for that when you reach that point. But you got to start with the easy stuff. Just don't touch it. Use those levels as pivotal reversals to give you the clue as to where that asset might go. Now let's move on to the next one, which is the candles. Now, where we needed support and resistance to identify the largest buyer and seller that's located on the chart, we're missing something, and that's the emotional level of those buyers and sellers on that chart. And there's no better way to uncover the emotional level of market participants than candlesticks. And there are no other candlesticks that represent the height of human emotion than the John Wick and Power Tower candles on your screen. Now, the John Wick is a slang name I came up for the candles. Most of you would know these as the hammer and the inverted hammer. And on the other side, I call these the Power Towers. Most of you would know these as engulfing candles. But it's not what we call them. It's the significance of what these candles represent and how they uncover the emotions you need to make great trades. And let me show you what I'm talking about. I'll draw it out for you. So let's start with the bullish John Wick candle. The significance here is that at one time, this candle was extremely red. And look, if you've traded for longer than 3 minutes, you've seen one of these candles, and you're going to see them every day because they are supposed to happen. They are engineered to happen. I've often referred to them as sucker candles. So when you see one of these, you automatically should think that's probably going to end up becoming a John Wick or a hammer type candle. But the significance is this. Let me get back on point. Before that candle could close out the time period being the chart you're looking at, 1 minute, 5 minute, 1 hour, 4 hour, daily, whatever it may be, it had retraced a significant portion of that price. And in its wake, it left this nice, long, tall wick. Now, I said in a past video before, the significance of that and what we need to understand to its core is that it takes an awful lot of money and power to turn a candle like that. Meaning, whoever did that is serious, and it's most likely going to reverse to the upside. That's why I said it uncovers the emotion. And what it did is it created the liquidity. So to make that simple, it has the market moving in one direction. It's got all of these people thinking sell, 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 market crash, it's going to crash. I got to get out. I got to get out. I got to get out. And just like that, it flips and turns the other way. That's a sucker move, right? It's intended to do that. And when that happens, that's the point. You can draw all the patterns you want. But that's probably going to keep on going because whoever it was is serious about holding up the price. Okay. Now, the inverse relationship exists to the other way. It was very, very strong green. It could have appeared anywhere on the chart. A lot of traders chase that. But what happens is before it can finish, it sells off most of the way, right? And leaves this very, very long wick in its wake. Same significance, just going in the other direction. Now, the power tower candles have the exact same significance. They just look a little bit different. And what that would be is you would have this really strong green. Again, you've seen these before, and it just looks like it's going to keep on going. You're going to rip to the moon. It's just never going to stop, and everybody's piling in on that trade. But then the very next bar on the next time frame completely blows it out. Again, same significant. The point here is all of that activity was going one way and traders were going one way, and then they got snapped, rug pulled, or flipped, and it completely went the other way. And it creates two balances of emotion, from fear to greed, from greed to fear, in a very short period of time. And again, the power it takes to move that, it's most likely going to continue to move itself down after that event because there's just too much power inside of that candle. And if we reverse that situation and start with a red, it's the same exact thing. It was once red, and then it flips itself over here to being green, and it goes the other way, right? Pretty simple process, but those are the two powerful candles. And like I said earlier, I haven't made a trade in 20 plus years without seeing one of those two candles at one of those levels. Now let's move on to range. Now, where we needed support and resistance to tell us where the biggest buyer and seller as well as the premium levels are located on the chart, and where we needed the candlesticks to tell us the emotional level of those market participants, we need range to tell us what something is actually worth and whether it's worth our time in the first place. And the easiest way to do this is take a daily chart of whatever you are trading. So if you look here on the screen, I have now the daily chart selected, and you can still see our green line drawings on that chart. What we want to do is go up into the indicator tab and select average true range. We don't need to make any adjustments or do anything fancy with it. Just click it and go with the default settings, and you'll see it will give us a numeric value. In this case, it's going to be 400 points. Now, in layman's terms, what that means is that the NASDAQ is worth up to 400 points in most cases. That's its average range. It will either move up 400 points or down 400 points. Consider that like the stamina of that instrument. That's as far as it can go under general circumstances. It's not always general circumstances, but look at it that way. So let's go back to our chart above, and let's just kind of put 400 up here for reference. That's its stamina. That's what it could be worth in a day. So if you take a look at this move, for example, the base of the rally, up to the top, you moved from under 21,700 to over 21,900. So let's say 200 points. Now, I know all of you are pretty good at math. That is 1/2 of its daily range chewed up in a short period of time. And anytime you consume more than 20% of an asset's range in less than 20 to 30 minutes, you run the risk of a reversal, okay? That's not 100% obviously, but it's a good guide to use that once something has moved. Remember, we discussed that in the pattern scalp video, that if your range extension is too far, you're going to run into potential reversal problems. Now, the beauty of this one is now I hope the gears are clicking in your head, because hopefully what you have seen is now when you tie all of those things in together, you have a range extension at the open that ties in with a sell side level. What happens? You see that? What happens? And if I even open that up, I can add the candle in there. Let me expand this a bit so you can see it. You were taken out with an engulfing candle. So again, think of it. Range extension tags the premium seller level. John Wick candle here, followed by engulfing candle here, leads to a short-term reversal in that instrument. And it's going to work like that in most situations. So let me show you how I use each one of these every day with my trading strategy. So here's a recent trade we took on Palantir using the exact same 3-step formula I just showed you. And I want to do this one first before I move on to the live trade. That way you do know, in fact, it is repeatable. So on your screen, I've got Palantir. I've got it spread out over the span of about 2 to 3 days so we get the big picture. And I have a 5-minute chart selected. One thing I want to answer before I go, does it matter what asset? No. The beauty about technical analysis is exploiting the emotions of people, and people trade everything, and it's always going to be universal. Same way with levels. Regardless of what time frame, you're going to come up with the same levels. Don't overcomplicate this process. So what's the first thing that we need to do? Well, we need to identify the biggest seller on that chart, and that would be at the highest price point, right? So where do you see the highest price point? Hopefully, you said right here towards 140. Even if your eyes are bad like mine, you should have no trouble finding the highest price point. Next thing we need to do is find the biggest buyer, which is all the way down here at the lowest price point. And those are our premium levels. So this will be our A plus level and our A plus level here. In the perfect world, that's exactly where we would want to be to make a trade. And to show you just how powerful those levels were, what happened when you hit that point? You went on a rally. What happened when you hit that point? You sold off. Chances are that's the exact same thing that will happen again. Now, even if your eyes are bad, you're seeing the same thing I see. Palantir is in the middle of those two ranges, which is pretty interesting. So what we're going to do from here is we're going to mark out a couple of other pivot point lines. So I'm going to do 3 more lines. I'm going to take this point right here because there's a few of them. There's 1, there's 2, and almost a third right there. And then we're going to draw that out. I'm going to grab another line. I'm going to go to this pivot right here and draw that one out. And then I'm going to grab another one and put it right here at this base where there was a lot of activity. And it's pretty close to this one. And I'm going to draw that out. Okay. So those are our lines. Now the top 2 are A plus, the middles are B. We don't know what the market's going to give us, so we got to be ready for everything. But the simple strategy, because this is a reversal-based theory on range, anything that gets up in here, we want to nestle ourselves against that seller. That's what we want to do. We want to sell with that seller. We want to buy with that buyer, okay? Now, the next thing we do is collect our range. What is Palantir worth in a single day? If we go down here, I've got the ATR selected. You're going to see $6.50 right down there, $6.50. And for reference, what I'm going to do is I'm just going to put $6 right over here in the corner. Okay. Now, if I open up Palantir's chart, right, and we get a better look at it, and I measure $6, where we are sitting, which is just slightly under 134, well, $6 takes me up to 139, which is right towards the top up here. That would be the maxed range. Underneath of that, it would be about 128. So let's go look at that and move the chart up. And that's going to be sub this line. Again, very premium levels, and those 2 big buyers and sellers should show up if that happens. So if we get the range extension up here, I'm a seller. If we get the range extension down here, I am a buyer. And what we'll do is just let Palantir open up, and then we're going to go from there. So if we move forward here, out of the open, you get a very strong push with Palantir, correct? You'll see that. A very, very big move. Let me open it up where everyone can see it. But what do you see? Where is it, I should say? You moved right into what? The big seller zone. Now, when you see this in real time, you're thinking, this is a hella breakout. It's going to the moon. I got to get in on it. But think about what we just said. What would make you think that that seller isn't going to return? So in this area, we want to look for the very first engulfing or John Wick. And what happens on the very next candle is we get just that, the engulfing candle. Now, this is not an entry class, but what I normally do is on the engulfing candle, I take about 50%. If it retraces it by 50%, which it did, that is my entry. So what I would do here in this case, based off of the range extension. So by the way, when we rallied here from a low of 133.50 or so up to 139 almost, we chewed up $5 of its daily $6 range in a short period of time. This is called short-term overbought, short-term extension, short-term enthusiasm. This is a trap because the bigger buyers and sellers are going to use this opportunity of retail traders chasing into it to sell into them just like they are here. I would take my target price and stop losses in this case and put it right above there. I would target a very simple 2 to 1 in this case, which is just about right down there. And that would be my trade. And I would take it based off of those parameters, and you'll see it in fact worked. So let's move on to a live trade that we made in our live community so you can see how it works in a real market. So what I'm going to do in this section is play back the live video and audio from today's trading session, which we had a short on the NASDAQ. And it's the exact same strategy I just showed you, the same one on Palantir, the same one that we went through. Again, it is very repeatable. Now, each section we go through, I'm going to explain how we came to that conclusion and why we made that trade. Starting with the entry. Let's listen to the entry and how we decided to get into this short trade. I'm on NASDAQ as well, 22093. 22093 short, same look. I'll tend to scalp this because I think they're going to want to buy the dip, and I may actually do the same thing myself. Be nice if we could just
like 22093, and the stop is above.
I think this would be good for me right here on the cover. I'll take a few contracts off here. Again, you guys have sizing. You do your own thing. I'm just explaining what I got going on here. I'll go 1/2 down here somewhere. I would take the stop. I will trail it, right? And let it go. So let's walk through that entry so you understand it fully. The first thing we need to do, as always, is identify the biggest buyer and the biggest seller. So I will just condense down this NASDAQ chart spread over a few days. It should be pretty easy to see that up here is our highest seller. And then we have this range down here, which is our B level, right? And you'll see that is exactly where the NASDAQ landed. So long before we got there, we were thinking that somewhere in this space, the John Wick or Power of Tower candle would show up. What else did we do? If we come back and we look at the daily range of the NASDAQ, we are at about 380 points of daily range, okay? 380 points. If I look at the base of the rally where it started from 21,896 to 22,120, I've chewed up almost all of that range in a very short period of time. Now, rather than rallying right at the open, it started in the pre-market. Doesn't matter where it starts, range is range. So what I did was put my sell order in at 20,093. So this is going to be a little bit late of an entry, but you'll still get the point. Stop loss was at the high of the day, and the target price was down into here, roughly 2-to-1. But it's more than just that. If I kind of back it up, I want you to take a look at another level that you probably would have drawn earlier, okay? If you look at this spot right here, I just want to put a little bit of a line right here above all of that pre-market hesitation, and let me move it out, okay, just where everyone can see it. The power of these lines that you draw is usually they're going to move between one another. So the target was moving down into those regions, and that's how we managed the trade. And that's exactly what it did. It never stopped for the rest of the day. All right, guys, I hope you can see the true power of this strategy and you feel it can get you to the next level as a trader. Now, there's one thing I want to say to you from one trader to the next. If you can just master the 3 things I showed you today, the supply and demand levels, the candlesticks that take place at those levels, and the range, you can go a long, long way in this business. What I showed you is just scratching the surface. There are so many other opportunities and setups using that formula. It's just unimaginable. So if you just master that, you're going to go a long way in this business. Now, I did promise you a 4th step, a special bonus. If you're struggling right now by just kind of getting all this stuff, or trading just feels like you're trying to do brain surgery in a blender or something, every week my wife and I put out something called the Gains Guide, and it maps out all the premium levels of the major indexes and different stocks and everything and assets to trade. We lay all those levels out for you. It is free to everyone. All you got to do is follow the link in the description box, and I will hand you these levels. That's it. It's that simple. And that is your 4th bonus. As always, guys, it's been a sheer pleasure. I hope you learned something today. As always, I look forward to seeing you in the future. Take care, trade well. See you soon. Cheers.